This morning, we've been chasing some downside action on the back of a pop for markets yesterday, trading around some hopes that there could be a conflict end in sight, but not the case as negotiations through intermediaries drag on. You can see the markets expected to reprice lower again today.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
Hindustan Unilever and CNBC TV 18 bring back lessons in marketing excellence with an exciting new season. Finalists from across the country tackle the challenge of unlocking the orange economy while scaling HUL's products for new consumers. Watch who will rise to the top and take the trophy home at these times only on CNBC TV 18.
Premium boarding, premium space, premium meals and more in India's only premium economy.
This is Network 18, and you're watching CNBC TV 18.
Some of the news flow yesterday hopes that there could be negotiations through intermediaries. Perhaps there could be an end in sight. But of course, the realization now we're counting down to the weekend. And was this all just a stalling tactic for Trump to take further military action in the Middle East around Iran? So the markets this morning looking somewhat soggy. As you can see, we're down just over 0.6% from the outset, and a lot of red moving quickly onto that heat map behind us.
Yeah, that pattern continues. Oil goes up, equity markets go down. And as Karen was saying, we've seen that in the European Stock 600 giving up territory after a previous session in which all of the regional benchmarks closed higher, between 1.3 and 1.4%. Very much a negative start to the trading session today, though. And let's have a look at the individual sectors and how they're doing. These are the gainers. It was There we go, you caught a glimpse of them there, but the media stocks, oil and gas, the only two sectors that are gaining in the first few moments of trade. A very different picture from yesterday, in which all sectors closed the session higher, led by basic resources, which added 2.4% almost. Let's bring back those losers, the board of the biggest fallers. It's basic resources today that is on the back foot, down almost 2%, giving up a significant amount of the gains that it made yesterday. Industrials also trading lower. Banks and financial services down around 0.8, 0.9%. We mentioned all of the main benchmarks in the region closing higher yesterday. This is how they're doing in the first few minutes of the Thursday session. It's pretty even across the board, all of them trading into negative territory. As I was saying, that being dragged down by the increase in the price of oil. We have seen Brent up around about 2% or so, sitting at around $104, $105 a barrel. Some skepticism around those claims by Donald Trump that talks are ongoing with Iran. Iran denying that there are any direct talks, so investors still wary and cautious about where the end is going to come in terms of this conflict between the US and Iran. Karen.
Let's get some thoughts with Chris Wiley, CIO at Connor Broadley. Chris is behind the world famous traffic lights investing system. You always tell us red, amber, green, what is transpiring in terms of sentiment. The conflict, I mean, it's changing on a daily basis, it seems, in terms of sentiment. How are you recalibrating around sentiment on a daily basis?
Well, on sentiment, we have seen some movement on that. Actually, you're right. That's always the most volatile of our traffic lights because it can turn on a sixpence. It hasn't quite done that. It has started a swing back for a red light, which for us is contrarian signal, i.e. buy when others are fearful, sell when they're greedy. So the red was indicating complacency. You know, we went to red from amber red in end of last year, beginning of this, and now it's starting to swing back and it's back to amber red. So given that there are some indications that investors are quite fearful, it's interesting that it's only amber red. It's not amber or even green yet. And so we're seeing clear signs that investors are nervous, very nervous, but we're also quite a long way away yet from a contrarian buy signal. So we don't think that we're into deep pessimism or extreme pessimism yet. And I think that's all explained by what we've all been talking about for weeks, this sort of Bermuda Triangle of policy meets markets and intentions and second intentions and hidden agendas. But the taco trade, which is the nexus of that, Trump always chickens out, I think that's what's holding people in at the moment, because nobody wants to be the wrong side of the taco trade in case Trump does chicken out. And that's what's stopping investor sentiment from getting really bearish.
But the reality is that trade doesn't necessarily work out just because Trump flips a switch this time. We keep talking about the duration here, the hits to infrastructure, where the supply of energy can come back online quickly enough, where the supply chains can counteract, or whether central banks are dealing with a firmer inflation story for much longer, for a number of quarters, and they need to react and change policy to the point where we've lost the interest rate reductions from the Federal Reserve so far. That has a consequence, though, for investors, doesn't it?
Absolutely. It's almost like you read my investment letter from last week, actually, because it did cover, we've been covering these things. Yeah, the equation has changed. We've moved in the last few weeks from the assumption that this would be a short-lived conflict to one where we're beginning to contemplate not only that this conflict might stretch for longer, but the damage which has already been done, aka 17% of Qatari gas production out of action for 3 to 5 years. I mean, that is a game changer, not complete game changer, but it certainly starts to change the interaction. So there is, I think it's safe to say, there's no clean exit from this anymore. That passed a couple of weeks ago. We're into a different scenario. So even, and a key point, and the risk around the taco trade, if it is holding people in, it may be overstating Trump's agency, his ability now to dictate events, which is at the core of that. But when he says it's over, it's over. But that's now more questionable.
Chris, I was also reading your newsletter to your clients, to your customers, and it was very striking that you point out the odds of the war being over by the end of May, now down to just 42%, before they were sitting at 90%. What does that shift in expectation mean for the markets going forward, do you think?
Yeah, well, I think that